One, Wall Street wants to confuse you. They use those terms, those very confusing terminology in the financial space on purpose, because they want you to feel like you don't know, so that you have to give your money up to them to manage on your behalf. And the whole thing is they're going to get fees off of that money day 1, day 2, day 3. As you keep money with them, they're going to get fees from it. But you're not going to actually get access to that money until you're in your 60s and 70s. So it's a brilliant business model for Wall Street. It's just not beneficial to you. And so one, you got to understand they do that on purpose. They give you all this, complexity unnecessarily. Number two, to simplify investing, if you can just think about that formula, whatever I do with money, it needs to either increase a passive income or decrease a monthly expense. And so I can then be objective.
All right, guys, welcome to another episode of the Winner Circle. I'll be your host today, and you already know I'm Jay Adewole. I'm thrilled to have all of you join us today for this episode titled Investing for Beginners, Where to Start. So today we are joined by Joey Mure, managing partner of Wealth Without Wall Street, a company reshaping how individuals think about financial freedom. Joey's journey is rooted in clarity, confidence, and empowerment, centered on the belief that anyone, no matter their background, can take control of their money and build a lasting wealth. Looking at Joey's background in wealth strategy, financial education, and helping thousands break free from traditional financial limitation, he has become a trusted guide for people seeking simple, strategic, and safe way to grow their money. True Wealth Without Wall Street, as the name implies. It teaches everyday individuals how to escape the noise, understand their options, and make smart financial decisions without depending solely on conventional systems. So in our conversation today, Joey will break down what investing really means for beginners. That means the first step to take, the biggest pitfall to avoid, and how to start building wealth with confidence, even if you feel completely new to the world of investing. So I want you to join us as we explore how clarity, discipline, and the right strategy can help anyone begin their wealth building journey, and why now is the best time to get started. So let's dive in. Hello, Joey.
Hello, Jay. Thanks for having me.
All right, you're welcome. So looking at your work at Wealth Without Wall Street, it has helped thousands rethink money. So what initially inspired you to start teaching people how to build wealth outside traditional systems?
For me, Jay, it was all about the lifestyle that I had was not matching up with what I hoped it would be. And I'll just give you an example. I was in my late 20s and was doing all the right things. Gone to school, gotten good grades, gotten a good job, was working in the mortgage business and making over $300,000 a year. I thought, wow, this is financial success. This is financial security. This is freedom. And I look around and I have 5 beautiful daughters, Jay, and I would be tied to my phone constantly, having to take the next phone call just to keep up this active income. And what I realized, this was, sitting on a beach, my family's already down there and I'm at the beach in the beach house. And I say, hey, you guys go down. I'll be down there soon. I just have one more phone call. And then 4 hours later, I'm walking down to the beach and they're walking back up. And I realize this is not how it's supposed to be. I'm working for these people, but now I don't get to spend any time with them. And what I realized is I was doing things the wrong way. I was building my life on retirement, not on financial freedom, because I was the only asset at work. And so I needed a different system. I needed a different process. I didn't know what it was at the time, but I started on a journey back in 2009 that led to me then founding Wealth Without Wall Street in 2016 with Russ, my business partner. And we went from, talking about $2,500 a month in passive income to over $50,000 a month in passive income today. We report on that on our podcast every month. And now that is what we help other people do, is go from being the only asset at work in their household to getting money to work on your behalf so that you can get your time back and be more free.
All right. Thank you so much for sharing that, But I have a follow-up question, looking at your experience so far. What did you see behind the scene that made you want to give people a different way?
Well, I worked at Wells Fargo Mortgage at the time. And so this is a large national bank. And I saw that people were doing things with money that didn't support financial freedom at all. They were sold the idea that you need to retire one day. You need to work and put money away into these traditional financial planning vehicles like Ks and IRAs and 529 plans and all the things. They were told to pay off debt as soon as possible. And they were told that one day you're going to retire. And that's what you only hope that you have. When in reality, it's not even biblical to say one day, tomorrow is when I'm going to start living, or I'm going to start being free. Today is the opportunity to take advantage of. I want to have more freedom today. I want to live in freedom today with my family, with my community, with my church, whatever you're passionate about and whatever you're gifted in. We want you to be able to live in that today, not just putting up with a job or a business that you own because you don't know any other way. And so behind the scenes at the bank, I saw people making very bad decisions with money that weren't helping them to become more free. And they were just like me. So I was like, I know I can talk to people because I've lived it, I've done it, and I found a different path, and I want to help people along the same path.
Thank you for sharing. If you look at your mission and, looking at your profile, your mission centers on helping everyday people gain clarity and confidence with money. But how do you define true financial freedom in your own life?
True financial freedom is, first of all, a formula. And second of all, it's a different motivator for everybody. So the formula is not something that we made up. It's just something we subscribe to. You've probably read Rich Dad, Poor Dad and Robert Kiyosaki. People call that the Purple Bible, right? And he says, when your passive income exceeds your monthly expenses, you are financially free. And all that means is if I have something else like coming in the door into the mailbox money, if you will, that pays my bills, I now have all my calendar to myself. I can choose what goes on there. I can choose who I'm going to spend time with, where I'm going to be, and what I'm going to be doing. That to me is like the simple formula and the picture. But then the motivation is different for everybody, Jay. We have over 10,000 people in our app. You can find it in the App Store, Wealth Without Wall Street. And people come in and the first question they ask is, when I'm financially free, what will I be doing? And people answer that question. And I can tell you, everybody has a different motivation. Some people say, I will be dropping my kids off at school and picking them up in the afternoon. Some people say, and we actually had this guy on our podcast, he said, I just want to have breakfast with my kid every morning, because he couldn't do that with his current lifestyle and job and business. We have people that say, I want to be able to give more. I want to be able to travel the world. I want to be able to be involved in my kids' lives more. Whatever the motivation is different, but the formula to get there is simple when your passive income exceeds your monthly expenses.
Thank you for sharing. Many beginners, they feel overwhelmed by all the financial terms and options out there. Options, crypto trading, a lot of investment out there. So for you, how would you explain investing in the simplest, most practical way?
So the first thing I would say about investing is a couple of things. One, Wall Street wants to confuse you. They use those terms, those very confusing terminology in the financial space on purpose, because they want you to feel like you don't know, so that you have to give your money up to them to manage on your behalf. And the whole thing is they're going to get fees off of that money day 1, day 2, day 3. As you keep money with them, they're going to get fees from it. But you're not going to actually get access to that money until you're in your 60s and 70s. So it's a brilliant business model for Wall Street. It's just not beneficial to you. And so One, you got to understand they do that on purpose. They give you all this, complexity unnecessarily. Number two, to simplify investing, if you can just think about that formula, whatever I do with money, it needs to either increase a passive income or decrease a monthly expense. And so I can then be objective. It doesn't take a genius to figure that out, right? If I go, so you start thinking about it like, oh, I've heard, paying off my house is a good investment. You've heard people say that, right? Well, here's my question. If you have a mortgage that is $2,000 a month or $3,000 a month, whatever the case is, and you want to pay it off faster, you have to start putting extra money towards that mortgage every month. And so let's just say the mortgage was $2,000 and you start paying $3,000 a month because you want to get paid off in half the time, right? Well, that extra $1,000 a month, you have to start thinking about what would that $1,000 a month, is that actually creating passive income for me today? The answer is no, right? It's not creating passive income. Well, then is it reducing a monthly expense for me to pay an extra $1,000 per month on my mortgage? And the answer is no. It's reducing a balance, but it's not reducing the monthly expense until the house is paid in full, which could take 15 plus years. So as I'm paying that extra $1,000 a month, it's not getting me closer to financial freedom because it's not increasing passive income or reducing monthly expense. Now I can make a very clear distinction and say, yeah, this isn't a good investment for me. If I could take that $1,000 a month and start creating passive income or reduce a monthly expense, that's a better use of the money. And we can talk more. There's a lot more steps into becoming an investor, Jay, that I think most entrepreneurs and business owners are optimistic. And that's why they're really good at business. But an actual investor is the opposite of an optimist. They're actually pessimist. They actually go into a deal and say, hey, this deal is not going to work. Prove it to me. Let me see all the holes in it. Let me see all the negative things of it before I ever decide to move forward. That's a disciplined, wise investor. But an entrepreneur has to be optimistic. They have to be looking for all the good. They have to be like, hey, I'm going to power through. I'm going to make this deal work. And that's what makes them a good entrepreneur. But you have to stop and say, there's a set of skills that I need to learn to actually become an investor. And we actually help walk people through that very process because...
Hey, winners, have you got a business or brand that deserves to shine? I'm just saying this right now because I'm giving the opportunity for you to advertise on Winner Circle with Jay and connect with thousands of ambitious entrepreneurs and leaders who are about growth. It's all about growth. So whether you are advertising a product or a service, secure your slot as low as $100. So what are you waiting for? Email us at advert@winnercirclewithj.com. Here at Winner Circle with Jay, we just don't talk success, we create success. All right, see you soon.
We know that this is a big need in the world.
All right, thank you for sharing. You've already said it all, which is straight to the point. But people often ask, where do I even start? So in your opinion, what is the very first step a beginner should take before investing any money?
Well, I'll answer it by bringing back up that whole book, Rich Dad, Poor Dad, Jay. I bet you've interviewed hundreds and hundreds of people who have read that book. Am I right?
Even the last guest I had, spoke about it. Just like top 3 books is.
Well, it's a wonderful book, and it actually lays out, this exposure, of the idea of financial freedom. But very few people who have read the book are actually financially free, Jay. That's been my experience. They're inspired by it, but they don't actually become financially free just by reading the book. There's actually 2 things that a person needs to do in order to become financially free after knowing the formula. They have to actually get their cash flow system in place. Like where they're making their money, they have to have surplus. Right? If somebody's living paycheck to paycheck, they can never become an investor because they have no money. They have nothing to invest. But once you actually have your cash flow system in place, it actually will then support the fact that now I have money. Now I have something to do with this money. And then they have to become an investor. That's step 2. So, and when you're trying to become an investor, I would say there's the first step is recognizing that you have a unique investor DNA profile. Right? How God created you to see the world You could either be a driver personality or an influencer personality or somebody who's steady and loyal or somebody who's very analytical and cautious, right? That's how we think about the investor DNA profiles. You have these very specific things that are really good about you, but they also come with some weaknesses. And if you don't start with that, you will just get drawn into, oh, this is a good investment because it has a good return. But really, if you don't know if you line up with that investment personality-wise, the investment return doesn't matter. You have to actually align with it first. And so that's where we start. Instead of saying, hey, look at this investment, we say, well, look at you. Who are you as an investor? How did God create you to see the world? What are your pros, cons, your strengths, your weaknesses? What sort of opportunities do you have to actually focus in on what investments work best for you? Once you define that, we can talk about like step 2, step 3, but that's where I would start instead of talking about the investments themselves. No. In fact, I would highly recommend you don't start with a lot of money because if you're a beginner investor and you put a lot of money into an investment, that's a very easy way to lose a lot of money. The Bible says a fool and his money are easily parted. And I would say if you've not spent the time to actually be educated on being an investor, you've not spent the time doing this investor DNA profile I'm talking about, or building your buy box, or in interviewing multiple people. What most investors do, Jay, on the very first thing, they hear one thing and they do one thing. Oh man, I got this investment. I'm going to put money in it. Whoa, wait a minute. No, you haven't even compared it to anything, right? If you start interviewing 4 or 5 or 6 different people who have different things, all of a sudden you're going to start thinking, oh, wait a minute. I like this about this one. I don't like this about this one. I didn't know this was even possible over here. Like, you start to really get exposure. And if you just do the first one that comes by, man, that is a crapshoot. You're just asking to lose your money.
All right, thank you. What amount would you recommend for someone who want to start small but consistent?
What amount? It really just depends. Now, in some cases, like right now, I'm actually looking to buy a warehouse that is not going to take any money out of my pocket. It's going to be 100% financing, and it's already got leases in place. It's going to pay for itself from day one. You have everything from that to somebody who can only get into a deal with 50,000 or more, because there's certain deals that dictate a minimum that you have to put in. I even have people that will say, you know what, I have an old car that I'm not using, and I can put it on Turo and get some passive income from that. We're talking like an $8,000 car that you might not even have, might be sitting in your driveway, and you can start getting passive income from people coming to rent that car from you. I have several cars on that platform right now that make $400 or $500 a month after paying somebody to manage the whole process. I'll give you one other idea that people have done. This has virtually no risk in it. There are people that will go and rent out space at their house. Like, they may have a lot next to their house that they're not using. Neighbor.com is a platform that you can go and list that space online, and people will come and rent from you just to park their vehicle there, or just to put stuff in your garage. Like this, you can monetize most anything, and it doesn't cost you anything to do. So there's those sort of investments, and all the way to people that are putting 50,000 plus into, syndication deals. We can talk about more, but it's all over the board.
Was there any mistake you personally made earlier on in life, before you understand all this financial information, that shaped your approach today?
For sure. The first thing that new investors make mistakes on is, like I said before, jumping to invest in the very first thing that they hear, right? Number 2, hey, my friend told me about this investment, so I trust the friend and I'm just going to put money into it. If you don't get direct to the person who's actually doing the investment, you have not actually done due diligence. Case in point, years ago, I heard from a guy that I trusted, and I thought he had done a lot of due diligence on a deal. And so I assumed that that all this was in the clear. It was all above board. I put money in it, found out later that it was a Ponzi scheme. And so lost a good portion of that money, probably 70% of it is gone. Well, I never realized that the person who is actually doing the investment is the person I should have been talking to, not my friend. I should have started maybe with him, but then I should have gone to the operator themselves, the person who's actually doing the investment. If you don't know that person, you should not invest. Period. End of story. Don't go there. So that's another mistake. The other mistake, I think, is people just chase the rate of return. They see a number on a page and they say, oh man, this is going to be 16% return. This is a good investment. But they don't actually understand that those are just projections. Those are just possibilities. They're not dead set, definitely going to happen. And anything can go wrong in the process of that investment. That could change that from 16% to zero or less. You could even lose some of your money. So not just focusing on rate of return, but doing due diligence on the entire project, the entire process. I'll give you that example. I put money into some of these long-term syndications that are 3 to 5 years long. And I was focused on getting cash flow today. And they were focused on when we sell in 3 to 5 years, you'll get your money back plus some interest. Well, they both say interest, they both say rate of return, but one is very different than the other. And now I'm waiting, hoping that it's going to return my money back with interest, but it's not actually turning into cash flow today, which doesn't help me create financial freedom, right? So knowing those things is very important. And the last thing I'll say is when people invest in things that they don't line up with personality-wise, they could either lose that money, or two, they could just get into a bad situation that doesn't really help them long term. I bought into a drop shipping business thinking, oh man, this is easy. You don't have to do anything. You just connect the dots between buyer and seller. You make all the money in between. Super easy. In the meantime, I realized you have to actually operate this business. You have to actually be good at Google ads and SEO and all these sort of things. And I didn't know anything about it. And so I'm sitting there having to hire people to try to help me run it and all this stuff, and lost a good bit of money doing that, but realized it wasn't a good fit because I'm not an operator. I need an operator in every business that I invest in. Otherwise, I don't need to touch it. And so anyways, those are some of the things I've done wrong that hopefully people can learn from.
All right. So straight and direct for you so far with your experience, are there any red flags you think beginners should immediately walk away from?
Well, the very first question that I would ask if I'm a brand new investor is, why am I the one getting pitched this deal? Like, think about that for a second. If this deal is so good that I would like to invest in it, there's a reason why I got pitched the deal. Why didn't someone else who's been investing for years and years already get the deal, already take the deal down? Why am I getting a shot at it? And that's not to mean like, hey, you shouldn't be getting opportunities like that. But when you're very first starting, the chances are if it's a really good deal, you're not going to see it. It's already been done by somebody who's been there, done that. They've done a lot of investing themselves, and there shouldn't be an opportunity for you. So that's a kind of a pride ego thing, right? That's a red flag. Another red flag is if you go and you research the operator, the person who's doing the deal, and you find that there's been any sort of legal cases against them. If you don't do that research, you will find out the hard way, because one crook will always be a crook in this investing game, and they can try to hide it, but you got to do your due diligence on the actual investor. That's a red flag. I think if you ask detailed questions and you request documentation and like proof of things, and they get concerned, or they get to where they're defensive and they don't want to share those details with you, immediately walk away, because that tells me that they have either something to hide, or they're trying to act very quickly and they don't have time to spend on this sort of deal. It could be just a turn and burn type of situation. You don't want to get stuck in that deal. And that's the last thing. If they don't give you time to actually do due diligence, just pass. It's not worth it. There's a million deals out there, and you just don't get stuck thinking this is the only deal in the world.
Get stuck, just walk away. If it sound not if it sound too good to be true, I think that's a phrase, right? If it sound too
Mm-hmm.
good to be true, then definitely not true. So with if you look at this right now, because many listeners that are listening to this show right now, they want practical step. They want a clear roadmap. So what are three practical steps someone can take this week to begin their investment or investing journey?
Well, of course, I want to encourage you to call our office and get started because they're going to help you walk through all these steps. But if you want to do it on your own, you can just do a quick audit of your cash flows. All right. What am I putting money into that is either not producing a passive income or not reducing a monthly expense? I need to immediately stop doing those things. If I want to be financially free, then I have to change what I've been doing with money. You see, people have to think, man, when I first started putting money into some of these vehicles, I had an idea of retirement. Like that's where I was headed and what I was trying to accomplish. But now, if I want to be financially free, I have to do sometimes the opposite of what I had been doing with money. So, one, audit your cash flows. Two, I would say list down your strengths and weaknesses as a personality. What is it that you're trying to accomplish in terms of investing? Do you want an investment that's very hands-off, where you don't do anything? Or do you want to be in an advisory role for an investment? Do you want to be more hands-on or more hands-off? Do you want it to create passive income today, or are you looking for it to be 12 to 24 months from now? Are you wanting there to be an equity portion, or is it just cash flow? Do you want it to have tax advantages? If you can take in and make an audit of your personality, and then number three, the types of investments, what sort of characteristics do they have? Now you start to get real clarity. I have money to invest. I know what sort of person I am, and I know what sort of investment that I'm looking to acquire. Now I can go out with a really focused target instead of just going out there and saying, yeah, I would invest, and then just not having any sort of clarity. Everything looks like a good deal at that point. But the main objective to be able to do is say, what can I say no to, and what can I say yes to? And if you can be really clear, you can move quickly, you can feel really confident. And that's what our team does, is walks you through those steps to make sure that when you do invest, you feel really good and you see success and results.
All right. What can I say yes to and what can I say no to? So now, what should someone look for? Because we have people who are interested right now and they want to move forward. What should someone look for when choosing where to invest their money?
Well, I think that goes back to the question we just talked about. What are you looking for this investment to accomplish for you? Right? Do you need massive tax advantages right now? If so, then you need to make sure that's on your buy box, right? That meets the criteria that you're looking for. Are you looking for something that's going to create cash flow today? Or is it a year from now or 2 years from now? Then that way, when you talk to an investment manager or operator, and they say, well, this mobile home park is not going to cash flow for 2 years, and you want cash flow today, you can immediately say, hey, sounds like a great investment. It's just not for me, right? Or if you say, I really want there to be some equity potential, right? I want to put money into something, and I want to get cash flow today, and then I want it to also grow over the next 3 to 5 years, and I want to get more money back at the end. Well, if someone wants to then say, hey, here's a debt fund and it pays 12% per year, but there's no equity, you can say, hey, this sounds like a great deal. It's just not for me, because I want it to have cash flow and equity. And I want to have, make sure that I'm investing in those things. So I would say if you get clear on those things, you will find the deals. They will actually come to you, and you start putting out to the world, Jay, this is an important thing. Hey, I'm looking to invest in some alternatives. If you know some folks that are looking to raise capital for their deals, I'd love to talk to them. If you put that out in the world, people will all of a sudden start connecting you, and you'll start getting deals. But you have to then know what you're looking for and be able to funnel it down and say, yeah, this is a good deal, or no, it's not.
All right. Thank you for sharing that. We all know that in colleges, in high schools, in elementary schools, They teach everything, biology, government, everything, but they don't teach financial literacy. I don't know why, but I don't know. I just don't know. So for beginners who have been, from college, they're working in 9 to 5, they've never really gotten to the point where they have to work. When I mean work, make their money work for them, which now brings us to the fact that education is a big part of becoming confident with money. So where should these beginners go to learn reliable, simple financial information?
Well, I'm going to give you a couple of resources. Number one, our podcast, wealthwithoutwallstreet.com, I think is super. If you want free information, we always try to bring massive value to the world through the podcast and through our YouTube. Number two, we have a community that's free. You can actually join on our app. If you go to the App Store and search Wealth Without Wall Street, it's free to join. And actually, all this stuff I'm going to put on a website for you guys, Jay. If you want to go to wealthwithoutwallstreet.com/winner's circle, that way you can tie this podcast to where to go. wealthwithoutwallstreet.com/winner's circle. You'll get contact information, you'll get free downloads, and you'll get access to these things I'm talking about, the community. But when you want to actually take the steps and you say, hey, I don't want to do this on my own, I want some help, I want like a coach to help me along the way, then we can actually help you do that. Both step one, the cash flow system, and step two, our passive income lab. It's a 12-week course that you do with a group, and you also have an individual coach. And by the end of the 12 weeks, you end up with $500 a month in passive income, or we will guarantee that we will work with you until you do. You have to qualify for this. It's not everybody can do it, but that is the best education I've seen in the world on helping you become an investor, which, as you mentioned, is not something we're taught anywhere else. And so that's why it was such an important thing for us to build.
All right. Thank you so much. The word itself, the conversation today is about start investing, right? And your organization is Wealth Without Wall Street. So what does it mean to build wealth without depending heavily on Wall Street?
It is two different things. Number one, it's building wealth today with cash flow today instead of buying into Wall Street's mindset that you need to just defer it until retirement. So that's number one. You have to buy into the idea that I'm not here to just put money away and hope for the best when I'm 65 or 70. I want to actually start investing today, creating cash flow today. That is number one. And then number two is I want to invest in things that are not offered on Wall Street. We're talking about real assets, not paper assets like stocks and bonds in companies and other things. We want to actually invest in physical things, real estate, land, e-commerce businesses. We do online websites, content websites, things of that nature, Turo cars, things that will create cash flow today that are physical. You can go put your hands on them. One of our favorite things is land investing. We have a land investing business that creates notes every single month that people pay us on. That's over $36,000 a month. That to me is wonderful because you have a physical asset, raw land, that backs up these cash flowing notes that people are paying us every month. This is what is off of Wall Street, that it has all sorts of control factors in place. If someone quits paying, we get the land back and we can resell it. So collateral, those things are super important that are not considered Wall Street assets. I think it's less about the fact that it's long-term wealth. It's more about passive income today. Without cash flow, you're basing everything off of hope and accumulation and growing something in equity over time. Most people, that's what they focus on, is investing in things like that. And they look up and they're like, oh man, it's been 10 years and finally I sold it and I got my money back. Or they got their money back with a little interest or with a little growth. I would rather have the cash flow today because that's what actually buys back my time. That is what we're trying to accomplish. Are those things bad investments if they grow over 10 years and you get more money later? No. But does it help me get to financial freedom? No.
Hey, winners, as we continue our journey together today, I want to share something truly special with you. Over the years, I've had the privilege of coaching countless business owners, entrepreneurs, leaders, guiding them to achieve breakthrough results and unlocking their full potential. So I'm opening up just 4 slots for my monthly business coaching program. That's right, 4 slots. After being fully booked for the past 3 years, if you're ready to elevate your business with personalized guidance, proven strategy, and a supportive community, I'm here to help you navigate challenges, refine your vision, and achieve your goals. So if you're committed to taking your business to the next level, I want to hear from you. Reach out to me directly at jay, Jay, at winnercirclewithj.com and discuss how we can work together to build the future your business deserves. So don't wait. This is your moment. Join Winner Circle and let's embark on this transformative journey towards success together. And now let's dive back into today's episode. All right, everyone, welcome back to the Winner Circle podcast. I hope you are getting tremendous value from this conversation with Joey Mure. He's the managing partner at Wealth Without Wall Street. Joey has a remarkable way of simplifying wealth building, reminding us that financial freedom isn't about complicated formulas or chasing trends, but about clarity, direction, and taking control of your own money story. So what really stand out to me in this conversation is how Joey breaks investing down into simple, practical steps that anyone, absolutely anyone, can start applying. From shifting your mindset around money to understanding the power of passive income, Joey is showing that beginners don't need to be afraid of investing. They just need the right roadmap. And for many listeners right now, investing might still feel confusing, risky, or even out of reach. But I know for a fact that Joey, you've helped thousands of people start their wealth journey without feeling overwhelmed or pressured. But how do you recommend a complete beginner, someone who's never invested before, take that very step towards building wealth safely and strategically?
I would say, number one, you have to be willing to make a mistake. And that's hard to do because you mentioned earlier that we all went through an education process in school, and that education process did not involve anything around personal finance, financial freedom, even investing in general. But what it did do is it taught us that we don't want to make mistakes, right? Our traditional education system is based off of, hey, did I get 100 or did I miss the mark? Did I miss one thing here or 2 things there? And we were, celebrated when we got 100, perfection. But I can tell you, I've shared personally on this podcast stories of how I lost money and it wasn't good. I hated it. I hated to lose. But what helped is learning through those examples and those experiences so that I don't lose in the future. And so that I've been able to build $50,000 a month in passive income. That was part of the education process. If you're a new investor and you're too scared to lose, you're too scared to make mistakes, you will never make the first investment. But you have to actually see it as, man, if I have a setback, it's actually part of the process. It's part of the education process. So that's number one. The number two is I would go back and I would say what we just talked about. Audit your cash flows, put it in the right location so that you can start investing on your own. And then do those steps. Figure out who you are as a person and what the things you are looking to invest in. What do those things have to have so that you can say yes to them? And what do they not need to have so you can say no to them? The faster you do that, the faster you can feel confident about what you're going to do.
All right. Thank you for sharing. So what is the one action after listening to this conversation as we begin to round off? What's that one action they should take immediately after this episode?
I would say the first thing is just you have to put the money in the right place. And I can't do that for you. You have to look at what you're doing with money and determine, are these things helping me get to financial freedom or not? That's the first thing I would do. Go to your bank account, go to your investment portfolio. If you have to go meet with a financial advisor that you've been doing business with for years and just say, hey, how is this going to get me to freedom? How is what I'm putting money into getting me to freedom today? And if they say, oh man, you could retire when you're 65 and you're 40, are you willing to wait 25 more years? That's the question I'd ask. If you are, then you shouldn't make any changes. But if you want something today, you want something in the next year or two, then you got to stop doing the things that are going to keep you from doing that.
All right. Thank you so much. So to close us out, what is the biggest financial lesson you wish every beginner understood sooner?
Man, I think we've been saying it so many times today, but if you just think about life in terms of passive income exceeding your monthly expenses, it will simplify everything. Like I read Rich Dad Poor Dad when I was 22, 23, and I did not take any action. I learned it, but I didn't apply it. And here's the thing that I would tell you. I lost very valuable years that I can never get back. And I want to just encourage you as an investor, beginner investor, start applying what you now know. Everything should go through that same format. Does it create a passive income? Does it reduce a monthly expense? If it doesn't, I got to quit doing it. If it does, how can I do more of it? And it will cause you to get creative. It'll cause you to turn on that investor mindset that most people have shut off, or never had. And so I would tell you that is the number one thing. If you can think about life like that, you can create freedom so much faster.
All right. Thank you so much for sharing. And that's a wrap for another powerful episode of the Winner Circle podcast. I want to say a huge thank you to you, Joey, for joining us and sharing us, giving us a lot of information today, practical steps, and also empowering insight on how beginners can start investing with confidence. And also, if any of the listeners, if you want to get more information on what to invest and all that, you can always follow up with Joey Mure on all platforms. And I think you already shared it earlier. You talked about the Wealth Without Wall Street, right?
Yeah. If you go to wealthwithoutwallstreet.com/winner circle, that will give you all the things that we are talking about today, access to our content, and more importantly, like ways to contact me and let me know you heard me speaking to Jay here on the Winner Circle podcast.
All right. Thank you so much. So if today's conversation inspired you, I want to say don't forget to subscribe, rate, and review the Winner Circle podcast on your favorite platform, because your support helps us continue to bring conversation that equip entrepreneurs, leaders, and everyday dreamers with tools to grow, thrive, and win. So thank you for tuning in to the Winner Circle podcast today. Remember, financial freedom starts with clarity to start and consistent action. So until next time, I'm your host, Jay Adewole, encouraging you to keep learning, keep growing, and keep building the future you deserve. Have a nice day, guys. All right. Thank you.